Hello and welcome to another edition of Marketing Waves on this Thursday, the 22nd of July. So not really much in the way of changing sentiment around the US indices, which we'll be looking at today with the S&P and NASDAQ. We see COVID numbers really increasing across the globe. However, there's not supposed to be so much of a slowdown in recovery as of yet, unless infections obviously lead to fatalities that will start creeping up even more. The US indices in particular have been boosted the last few sessions, mainly because of the strong earnings season that we are in at the moment. We've got companies such as the big banks in America and others, even as was reported on the Stock Watch yesterday, Netflix actually didn't reach some expectations for earning per share, but their revenue and subscriber growth actually did get back on track. So certain companies are just really pushing the indices so high at the moment. So globally, it seems the expectation is that COVID won't hinder the recovery too much. So this is something to keep in mind, especially for the indices at the moment. So looking at the S&P first of all today, we're just seeing what the possibilities are, because we finished this cycle wave 4. Now we're moving up into cycle wave 5, and this is of the grand super cycle as well. So intermediate waves 1 and 2 look to be completed at the moment, and now we're moving up into intermediate wave 3, and this is at the Fibonacci extension of waves 1 and 2, which is just about at the 100% here, at the just shy of 4,500 at the moment. So that will be quite a psychological figure that I'll be looking at. So not too much to report on the S&P. We're just moving up into this primary wave 3, as I said, of intermediate wave 3. So once we start looking at these levels of it, as I say, it looks like we've completed intermediate wave 2 now as expected, and now we're moving up slightly. Let's just take a look at the signals as well. Well, as you can see, there is quite a strong signal here that prices will start pushing higher. Very, very bullish signal there. So it seems to be on course at the moment for what the Elliott Wave expectation is. So just something to look out for in the next few trading events. And just to look at the NASDAQ as well. I'll just take the indicators off for now just to get a better view. So again, not too much in the way of reporting something, an alternative, let's say. We're looking at a multi-structural move to the upside, and this is in waves 3, 4 and 5. 4 now looks to be completed, moving up into wave 5. Possibly could just move it over a little bit, and then that will complete the minor wave 3 as well. And we've gone past the 100% of the Fibonacci extension of waves 1 and 2, of minor waves 1 and 2, and now we're moving up into wave 3. So again, not too many surprises on the indices. We are expecting them to start pushing higher. Obviously, a strong earnings report is helping this scenario as well. Divergences, well, apart from if we didn't have this slight move up at the moment, then we could possibly see would have probably seen a divergence, which could have brought prices lower. But we've had this bullish move at the moment, so we are expecting prices to start moving higher into the back end of the trading week. So just a few things to look out for. So that's all from the Marketing Waves today. Just remember, keep an eye on the earnings report. If you're trading indices especially, there are quite a few stories out there that could really potentially halt the indices in its track or actually progress further. We're looking at a progression further, obviously, for both the NASDAQ and the S&P. So just something to look out for in that respect. So as usual, please leave your comments and any other alternatives that you'd like to discuss with us on the Elliott Wave analysis, and we'll get back to you as soon as possible. So have a great trading day ahead, and we'll speak tomorrow. Bye for now.